Something far bigger is unfolding in silver than most people realize, and the speed of this move is catching even seasoned market participants off guard. What looks like a sudden price surge is actually the release of pressure that has been building for years beneath the surface. Peter Schiff's view cuts through the daily noise. This is not momentum-chasing speculation. It's capital repositioning ahead of deeper monetary stress. When key psychological levels fail to slow price and instead act as launch points, it signals that demand is no longer price-sensitive. It's urgency-driven. What separates this phase from previous cycles is how tightly aligned everything has become. Currency weakness, rising commodity prices, and structural debt pressures are now feeding directly into precious metals. Silver, because of its smaller market size and tighter supply chain, reacts faster and more violently. Schiff's outlook suggests this isn't a temporary spike, but the beginning of a much broader repricing process. The early strength we're seeing indicates that this cycle is accelerating forward rather than building gradually, compressing what once took years into months. Looking ahead, the implications extend well beyond metals themselves. As trust in financial systems erodes, capital naturally migrates toward assets that exist outside digital balance sheets. Silver's volatility is not a sign of instability. It is evidence of transition. In this environment, pullbacks become brief pauses rather than trend reversals, and price no longer reflects speculation but necessity. If these dynamics continue unfolding as expected, silver may not merely climb. It may reset, forcing markets to confront just how fragile the current financial structure has become. Before we jump in, if you appreciate these deep dive market breakdowns, please take a moment to like the video and subscribe. It helps this analysis reach more people while it still matters. I'd love to hear from you in the comments.
Silver surged about $6.50 today, something like that. It blew through $100 an ounce. We ended up closing around $102.50. All-time record high. Silver's never been above 100. Of course, once it got to 100, it wasn't resistance. It just blew right through it. And now we're above 102. Gold also not too shabby, up about 45 bucks or so, but it couldn't quite make it to 5,000. Gold went out at around 4,980 or so. In fact, I don't think it's actually finished trading yet, so we'll see. But 5,000 is probably not going to happen until Sunday night. In fact, I think gold is going to do to 5,000 what silver did to 100. And again, that may happen Sunday night, Monday. In fact, the percentage gains, listen to these numbers. Silver was up 6.6% today. On the week, it was up 15%. And so far this year, which, we're only maybe, I guess, 3/4 of the way through January. We got another week left. But so far this year, we're up 45% in silver. Now, that's on top of the spectacular gain from last year. Another 45% this year, and we still have a week to go to finish January. And people didn't believe me when I said I thought the metals could do even better in 2026 than they did in 2025. Well, we're already off to a much stronger start to this year than last year. Remember, most of the rise in silver happened towards the end of the year, and now the momentum has continued in the beginning. Gold up about 1% today. On the week, just under 9%. I think about 8.8%. This was the best week gold has had since, I think it was March of 2020. And that was a big rebound from a COVID sell-off. So gold had a great week because it got killed the week before. That's not what's happening now. Gold had this great week when it was already trading at record highs. Right? So it wasn't a distressed, bounce back. This was pure momentum breaking out to record highs. And I think that there was some resistance at 5,000. And that's going to give way, I believe, on Sunday night. Year to date, gold is now up better than 15%. I think just over 15.5%. Again, we're not finished with January yet. This could be a better year for gold than last year. Of course, the gold mining stocks, the silver mining stocks, all making new multi-year all-time record highs today. Now investors are finally moving into this sector, but they still didn't gain nearly enough to make up for the lost ground, given how much the metals have moved and how much higher gold company profits are going to be. The current stock prices don't even come close to reflecting that reality. So I think investors are still kind of shell-shocked. They don't really get what's going on, but they will. There's going to be a wave of money coming in to these stocks and to precious metals, physical precious metals, going forward for the rest of the year, next year, and especially, too, when we get the money coming out of Bitcoin, which, by the way, Bitcoin was down 6% this week, not digital gold, the anti-gold. And year to date, Bitcoin is positive, but just barely. It's up 1%. I expect that to change by next year. A lot of people, these hodlers, are holding and hoping, and they're expecting Bitcoin to catch up to gold and surpass gold. Not going to happen. In fact, the people who have been waiting are going to throw in the towel. The speculators in the ETFs are going to sell, and the bottom is going to drop out of this market. A lot of the people that are in the Bitcoin ETFs raised the money to make those investments by selling their gold stocks and their silver stocks. That was a huge mistake. When Bitcoin hit 100,000 in December of last year, December of 2024, right after Trump won the election, and everybody was having a Bitcoin, 100,000 party. What they should have been doing, instead of celebrating at those parties, they should have been taking profits. They should have been selling their Bitcoin, which is now more than 10% below 100,000. And they should have been buying silver, like I said, because had they done that, they would have almost 4 times as much money today had they just made the switch from Bitcoin to silver. Now, it's not too late because it's going to get even worse for the Bitcoiners if they don't get out and get into silver or get into gold. And by the way, I didn't see any silver 100 parties raging today. But this is a much more significant milestone as far as I'm concerned. I mean, silver's a real deal. Bitcoin is just a speculative mania, in nothing. So yes, the fact that a speculative mania drove the price of nothing up to $100,000, yes, I mean, it's something to consider, and it was an impressive feat, but, it's nothing to celebrate. Now, of course, maybe $100 silver isn't something worth celebrating either, because the reason silver is going up and the reason gold is going up and the reason they're going to keep going up is not good news. This is a reflection of bad things that are going to happen, not just bad things that have already happened, but metals are forward-looking to bad things that are going to happen. The type of move that we're seeing in gold and silver, this does not surprise me. I've been waiting for this. I've been predicting this. What surprises me is that it took so long to start. I was doing some research, and I'm going to put these clips up probably next week. These are interviews that I did on CNBC back when they still had me on, when I was forecasting $5,000 gold, and they were giving me a lot of shit, right? Because like the first time I made a $5,000 gold pod forecast on CNBC, gold was about $1,700. And then a couple of years later, it's down to $1,200. And they're bringing me on, and they're playing the clips of my $5,000 forecast. And they're saying, Peter, you were wrong. You see, you were so wrong. How could you be so wrong? And then people were saying, I shouldn't be recommending gold. And this is at $1,200 now because it's gone down. You're losing people money. People could be in the stock market, but they're listening to you and they're buying gold, and you should be ashamed of yourself. And, you're just trying to sell gold, and you're screwing people over because you're talking them out of the stock market and you're getting them to buy gold. And I'm like, yeah. And they should buy more now at $1,200. And if you look, and I'm going to put this video up next week, but you can see the price of the S&P and you can see the $1,200 price of gold. Well, since that show, gold has outperformed the S&P. So people who did exactly what I was suggesting made more money. yes, the stock market went up, right? And I agreed that it was going to go up. I just said that gold and silver would go up more. Or I was talking specifically about gold, not silver. But I said gold would go up more than the stock market. And they laughed at me. They made fun of me. They said I should be ashamed of myself, for trying to con the public into buying gold. Well, they're better off, right? The people who are worse off are the ones who bought the S&P. Now, of course, yes, buying the S&P was better than just sitting in cash. And I acknowledged during these interviews that the Dow would go up, the S&P would go up. I wasn't telling people to short it. I just said that in real terms, priced in gold, it was going to go down. So why not just own gold? Which worked out. But, they just made fun of me. They had no idea because I knew this was going to happen.
As you heard, Peter has been warning that what looks like momentum is really a transfer of confidence. And that shift is now accelerating. When assets are measured against gold rather than headlines, the erosion becomes obvious. Capital hasn't disappeared. It's been reallocating quietly, moving away from instruments built on belief and toward assets anchored in scarcity. That process doesn't reverse smoothly, and it rarely gives late participants much time to react. Looking forward, this is where silver begins to matter far more than most expect. Gold usually absorbs the first wave of doubt, but silver reflects what happens when that doubt turns into urgency. Its smaller market, combined with rising functional demand, makes it far more sensitive once allocation decisions start to change. That's why future gains in silver tend to arrive faster and with less warning than traditional forecasts allow for. The year ahead is likely to expose how unprepared most portfolios still are. As currency pressure builds and global capital seeks insulation rather than yield, precious metals stop behaving like trades and start behaving like benchmarks. Silver, sitting between monetary insurance and industrial necessity, becomes the release valve for stress building elsewhere in the system. When that valve opens, price discovery doesn't move in neat steps. It jumps. What comes next isn't about chasing highs or predicting exact numbers. It's about understanding that the framework has shifted. Once participation broadens and positioning adjusts, both gold and silver can reprice in ways that feel sudden but were years in the making. Those moves tend to look obvious only after they've already happened, and by then, the opportunity has changed shape entirely.
The monetary order is being changed. We are leaving the US dollar standard exactly as I've been forecasting that we would, right? When Nixon took us off the gold standard, right, the world continued to accept the dollar as the reserve, despite the fact that it was no longer backed by and redeemable in gold, which was the only reason it became the reserve currency. It was because we had so much gold that Bretton Woods agreement, we were able to have the dollar as the reserve currency. But we went off the gold standard, but the world continued to accept the dollar as if it were still backed by gold. Well, the significance of what's happening now is that the world is now going off the dollar standard. They should have done it back in 1971, but they didn't. And that's what enabled over 50 years of this, service sector bubble economy to be created, where we will able to live beyond our means, consuming what we don't produce, borrowing what we don't save, thanks to the reserve status of a fiat currency that we created out of thin air. And Trump just went around the world telling everybody how they're nothing and we're everything and we're the greatest country and we're the strongest country and we have this huge military. And, I was thinking about invading Greenland and taking it over. But, I'm a nice guy, so I won't do it. But I could do it if I wanted to, and I may do it. You never know, right? And the only reason that we're in a position to do this is because the world pays for it. See, Donald Trump thinks America pays for everything. He keeps talking about how the rest of the world doesn't pay its fair share, and we're covering all the costs. Well, where do they think America is getting its money? It's borrowing it from the very nations that he accuses of not paying their fair share. We're borrowing a fortune from Europe. We're borrowing a fortune from South America. We're buying it from Asia. We've borrowed a lot of money from Japan. They're about to be cashing that in. The Japanese, I think, are about to be selling a lot of U.S. treasuries to pay down their own debt because their debt is getting a lot more expensive now with yields surging in in Japan. So this is a very significant event that is taking place. Very few people seem to appreciate the gravity of what's going on. I mean, yes, you're seeing it now in the gold and silver market, but most people don't get what it means, right? But they're buying now, and they're starting to buy, and money is starting to move in to gold and silver mining stocks. This is just the beginning, right? Because most investors have zero exposure, right? Now, in a few years, I think just about every institutional investor, all the pension funds, all the endowments, all the mutual funds, they're all going to have allocations to precious metals, whether it's some physical precious metals, mining stocks. Everyone's going to have it, because if you don't have it, you're going to underperform, right? Nobody wants to go out on a limb like I do and like be the first one to buy these stocks, right? Because if they don't work out, right, they look like a fool and they get fired, right? But what happens is once these stocks start performing, then if you don't buy them, you look like a fool and you get fired. So there's going to be all sorts of pressure on money managers to start allocating towards gold and silver, towards mining stocks, and get into foreign stocks and get out of the dollar. But what's going to happen, and this is an important point that you got to grasp, because we're headed for a crisis worse than 2008 for America, right? The 2008 crisis is called the global financial crisis, right? This crisis that's coming is not going to be global. It's going to be American. Now, the '08 financial crisis was made in America, but the problem was we had exported all of our bad mortgages all around the world. So when the mortgages went bad, foreign creditors that owned those mortgages also had losses. But what created more problems for the global economy was that when the financial crisis hit, the dollar was at an all-time record low, and it had a big rise. And that rising dollar, right, was a big problem for the rest of the world. This is going to be the opposite of that. This crisis is a dollar crisis, and it's hitting when the dollar is relatively high and has a long way to drop. Now, it's already dropped against the Swiss franc, but if you look at a lot of other currencies, the dollar is still high compared to where it was in 2008. And as the dollar falls, that's going to be a big positive for the rest of the world. Meanwhile, the bonds that are going to be crashing now are treasuries, and there isn't default risk there. See, there was default risk in mortgage bonds. There isn't really going to be default risk in treasury bonds. There's just going to be inflation risk. And so foreign central banks and foreign holders of our currency are just going to sell these bonds. The Fed's going to buy them if nobody else wants to. And if the bonds mature, well, they get their dollars. They get paid, right? The government's going to pay. And then they take those dollars and they're going to sell them into the market. And so this is a U.S. financial crisis. For the rest of the world, there's going to be a boom. It's going to be a bust in America and a boom, particularly in the BRIC nations, the emerging market economies that have been shouldering the lion's share of the burden of supporting the U.S. consumer, right? They're going to be relieved of that burden. They're going to see the value of their savings and their paychecks go way up, which means the cost of all the goods that they buy are going to go way down, and consumption is going to go way up outside the United States as it implodes.
What comes next is unlikely to unfold in a calm or orderly way. The system has already absorbed the early stress, and the next phase usually begins when that stress stops being absorbed and starts being transferred. Liquidity thins, confidence narrows, and price movements become sharper, not because demand explodes overnight, but because availability quietly vanishes. That's when markets stop responding to logic and start responding to necessity. In that environment, silver tends to move from being overlooked to being chased. Its role shifts from optional to required, both as a monetary shield and as a material that can't simply be substituted away. Once that transition starts, pullbacks become shallow and brief, while advances arrive in bursts. The real signal isn't the headline price. It's how difficult it becomes to source meaningful volume without paying up. Looking ahead, the risk isn't that prices move too far too fast, but that access changes before most people realize it has. When participation broadens and constraints tighten at the same time, repricing doesn't wait for consensus. It forces it. And when that happens, silver doesn't grind higher. It redefines the range it trades in, leaving those still waiting for clarity reacting instead of positioning. So here's the question for you. Are you positioned to benefit from this shift, or are you still relying on paper promises while scarcity quietly reshapes the market? Share your thoughts in the comments. Your perspective might help someone else see the bigger picture.